Good morning, everyone. Welcome to Prevail with William O'Neill India. My name is Rajashekhar Kongari, Equity Research Analyst, part of MarketSmith India team. Before we go ahead in this podcast, the disclaimer for this presentation is that whatever stocks we discuss in this podcast are intended only for educational purpose, should not be taken as an investment advice. It's very important to understand Nifty's price volume action to gauge the market, how the market is placed at the current moment. Also, I'll try to give the O'Neill perspective as well, how we are looking at the market at the current moment and the levels we are looking at. Looking at price volume action front, especially, Nifty has had a good upward rally in the 9 consecutive sessions, after which it came down little bit to its 200 DMA, which is a black line. The last 3 to 4 trading sessions, Nifty has been testing its 200 DMA and it is able to find a support at its 200 DMA. 200 DMA is a major support for index. If that level is also breached, then there will be more selling pressure happening in the market. That is the reason institutional holders are trying to give support to the market by holding that 200 DMA. On the upside, if you see the pink line here is a 100 DMA. The index has found resistance at its 100 DMA, and in the next couple of sessions or in the next week, if the Nifty tries to rally from here, then definitely this 100 DMA will act as a resistance. And if that level is also reclaimed on higher volume, then there is no major resistance going forward apart from overhead supply. Overhead supply has been there for the Nifty index from 18,800 level. So the Nifty is advancing from here. Definitely these levels will act as slight resistance, but if there is any fundamentally very good happening in the market, such as earnings season is going on, if the companies like Reliance, which is going to announce results today, with the company being a heavyweight stock in the index, if the company reports good set of numbers, definitely the index will be rallying. However, if you look at the IT stocks which have come up with the results, it was not a promising start for the Q4 earnings, especially IT stocks. Infosys was down 10% after its earnings missing street estimates. So there is some signs of concern globally as well, because IT majorly the revenue is from the exporting countries, especially from US and Europe. So there have been talks about recession happening in these areas. That is a reason for slowdown in IT sector. So that is a major reason for the Nifty's fall here as well. However, if the companies such as Reliance and other major banks, if they report good set of numbers, definitely index will rally higher. But if these companies also report bad numbers, definitely 200 DMA will be breached and we might see further selling happening in the market. Talking about O'Neill's perspective, we are still in rally attempt. We have been waiting for follow through day. Follow through days when Nifty advances 1.5% or more on volume higher than the previous session. That is not happening in the recent past. Even though the Nifty advanced 9 trading sessions consecutively, we have never seen a follow through day. That indicates there is no major buying happening in the markets. That is only a minor buying which is happening. For follow through day to happen, we need institutional investors taking fresh positions in the market. However, we have been adding stocks to model portfolio since Nifty has reclaimed its 200 DMA and also 50 DMA. We have a few stocks in the model portfolio which are doing good as well. Some of the companies which have reported their results are two IT companies. HCL Tech came up with their March quarter earnings. For the March quarter, revenue fell 0.4% sequentially to 26,000 crores. Profit also fell 2.8%, again sequentially to 1,300 crores. EBIT margin also took a hit. EBIT margin was down 140 bps to 18.2%. Good thing about the results is only attrition rate has dropped slightly sequentially to 19.5% from 21.7% in the Q3 quarter. Cyient, another IT company, has also come up with their earnings. March revenue has grown 8.2% sequentially to 700 crores, whereas the profit was up 4.6% to 163 crores. Siemens and Rail Vikas, which has a consortium, has received two different orders from Gujarat Metro. One is from Ahmedabad Metro and another is from Surat Metro. The share of Siemens in these orders is 678 crores of rupees. Vedanta, which has pledged most of its holdings in Hindustan Zinc, has additionally pledged another 2.4% stake in the company. With this, the company has pledged nearly 91% of its 65% stake in the company. Yesterday, if you look at institutional holding, foreign institutional investors have sold 1,100 crores of rupees of Indian equities, whereas domestic institutional investors have given support for the index. They have bought 832 crores of equities. Overnight, US market closed in the negative territory. Dow Jones with minimum losses of 0.3%, whereas S&P and Nasdaq took a major hit of 0.6 to 0.8% of decline. Asian markets are also trading in the negative territory. Nikkei is trading with flat basis with negative bias, whereas Kospi and Shanghai are trading 0.5 to 0.7% lower. SGX Nifty is indicating a muted opening for the market. We are expecting an opening around 20-30 point higher opening. That is not a major gap up opening. So there is no major gap up or gap down which is affected from the SGX Nifty. Whereas global markets are in the negative territory, so we might see some selling happening in the Indian markets as well. For the chart of the day, we picked Nestle India. The stock is currently trading in its cup-based pattern, which is very long. It is almost 6 months of trading range. It is just 3% to its pivot. There is no doubt about company's fundamental character. The EPS of 88 indicates a strong fundamental character. RS rating is slightly lower because the stock has underperformed and it has moved sideways only. However, there is some rally happening in the RS rating as well. That is RS line trending higher. Accumulation distribution day rating of A- indicates a positive sign on the technical front. Another key parameter which we look is the number of funds. The stock has been attracting new institutional funds, even though it's a very large market cap company. The company is able to attract a few more institutions into this company. So it's a major positive sign. So overall, this stock is looking very good on O'Neill front. That is the reason we have this stock in buy watch list as well. If the stock gives a good breakout, definitely a good contender for addition. So kindly keep these kind of stocks in buy watch list. As soon as market improves, and these stocks will definitely rally and outperform the general market. Thanks for joining today's people. Have a good trading session.